that time of the week. We sit down and talk a little economy. Our buddy Zach Abraham, Chief Investment Officer, Bulwark Capital, friend of the show, sponsor of the show, joins the program. First and foremost, we touched last week. They had the 50 basis points. You kind of talked about how you guys had factored that in. Let's talk about the fact that I look at this and, you know, it's hard not to in the political thing we talked about, but the reality is the stock market does great, but stock market, you know, Main Street and Wall Street are two separate things. I don't think people understand that because they think, well, the stock market's at record highs, so the world is great. You may have money in your retirement, but you're not touching that today. That's a different
Right,
world.
right. Well, especially with the specter of inflation hanging in the background, right?
Yeah.
And one thing that I really want to make sure that people understand is just how pernicious inflation is, and how unfair it is. Meaning, it always burdens the least of these in terms of incomes way more. Meaning, people are like, why would it do that? And I'm going, well, it's pretty simple, right? If you have $100 million of wealth, all right, and in inflationary times, assets tend to rise in price, especially when you look at the way that governments and central banks respond to issues these days, right? It's by the printing of money, by targeting asset price elevation. Okay, so if your cost of living goes up 20% and your assets go up 30 or 40%, you're worth 100 mil, or even $10 million. Okay, let's use an easier number, $10 million. Okay, your asset prices just went up and increased in value by $3 or $4 million. That 20% increase in inflation does not equate to anywhere close to an increase in your cost of living of $3 to $4 million.
Yeah.
Right? So net, you're coming out way ahead. Okay? When you're a working family and you don't have millions of dollars set aside, and the cost of living goes up 25%, that doesn't mean that your deposits in your 401k went up 25%. Right? Especially as it relates to the cost of your living, right? And so it's just totally skewed. So the only way you protect yourself from inflation is owning inflationary assets, things that benefit from inflation. But the only way you can own enough of them is if you own them in size. And that's why you'll never hear rich people freaking out about inflation. It benefits them on a net basis. Who it crushes is the middle class and the lower class. And so just, you know, talking to our clients to understand that, look, this is going to look to some as an easy way out. Meaning, you know, when you've got a debt issue like we have, right, there's two ways you deal with it. You either pay the debt off and lower your spending levels, which, shocker to all your listeners, most governments don't choose to do that, right?
They never.
or what you do is you inflate everything and raise asset prices to the point where, you know, yeah, debt's way up here, but now so are asset prices. So on a comparable level, it doesn't look that bad. But again, that game only works if you own assets.
So, you know, talking to Zach Abraham, Chief Investment Officer, Bulwark Capital, it's interesting because, again, I've been telling everybody, we have a two-tiered economy right now. We have the economy of, if you're in a business, you feel pretty good. Yeah, things have gone up, but you're not worried about going out of business tomorrow. You're not worried about laying people off, at least not right now. But when you take that hat off and you put on the consumer hat, that's the hat where the voters are going, wait a minute here. My life may be good at work, but my life sucks consuming and stuff's more expensive. And I don't see it going down. And when them, you know, lowering rates that way, and you and I are talking about it, are we headed towards another bump in inflation because, people just aren't feeling it, and all of a sudden you may be throwing some more money back in this market, in this world?
Well, I mean, just look at the news that came out today. You know, we're lowering 50 bips because we're afraid of this, and yet we just got out the GDP report for this last quarter, and we're growing at a 3% annualized rate. That was one of the things. Now, we thought there was going to be a 50 basis point increase, but we didn't think that until the Friday before, because that's when the interest rate futures markets changed and started forecasting a 50 bips raise. But that was a head scratcher, because you look at all the data the Fed's talking about, and you're going, wait, you're cutting by 50 basis points when both growth and inflation are still above trend. So, look, nobody knows, and I think one of the things that the last 5 years should have taught us is that we are living an economic experiment, and nobody knows, including me, especially me, what it's going to look like a year from now, 6 months from now. But sitting here right now, I will be shocked if you do not see an upswing in inflation again. And bottom line, it's not just interest rate policy; it's the deficit. The
Yeah.
deficit has gone up again. We were at 6.5% deficit to GDP. We're now at 7. Okay, just in the last 30 days, the deficit jumped up again on an annualized basis. So when you look, and Chad, we've never been here in economics.
No.
We have never before seen a government. The only time we've ever run deficits
Wartime.
this large, well, yeah, World War II. Even then, it wasn't in Vietnam,
No.
wasn't in Korea. Only one World War II. What we've never done is been running deficits like this and began a rate cutting cycle at the same time. If that doesn't inflame inflation again, I will be completely blown away.
Yeah, me too. Talking to Zach Abraham, Chief Investment Officer, Bulwark Capital. CPI, it talks CPI report, this report, that report. The reality is the Consumer Confidence Index. They talked about that this week. It's the lowest it's been in quite a while. And I tell everybody, CPI is hard to read because they take out everything that actually matters. Like, okay, as long as if you're buying shoes, life is good. But, if you're buying food and fuel and rent, but I always say, look at the confidence, because if you and I and the individual out there have confidence in what we're doing, we're spending money, that's what fuels the economy. If we're terrified and we're holding back, that's the thing that slows stuff down. And the confidence index was not very confident.
No, it wasn't. But I'm going to keep bringing back the deficits into place. When you're running deficits this large, consumers can pull back and play it cautious, and it still doesn't matter, right? Because to think about, to put this deficit in perspective, it's like saying you're thirsty and then trying to drink out of a fire hose, right? It's just so much money. I mean, we're running at a $2.1 trillion, not budget, right? People get these conflated, not budget, deficit, right? So total government spending, I think, is probably going to approach about 6 trillion this year, 6.5, 6 trillion. So when we're saying 2 trillion, I remember as a kid when the debt hit $1 trillion. We're tacking on 2 trillion a year now.
Yeah.
So it's just so the consumer confidence thing we need to look at that point, though, when you're spending that much money, and it's one of the things that I didn't handicap enough coming into this, Chad, is I was looking at the setup, I was looking at the debt, I was looking at the situation the banks were in, and when they started hiking rates, and I don't know if you remember this, but I remember you and I talking about it. When they started hiking rates, we thought there'd be serious problems in commercial real estate.
Yeah.
We thought those would metastasize into the banks. And we thought there would be problems, right? Well, all of those things happened. What we didn't factor in is the deficit staying where it was. I kept thinking that you would normalize it, right? They haven't. And so with that in mind, and that's what people need to, and here's an easy way to conceptualize it. In 08-09, through the great financial crisis, GDP from top to bottom, gross domestic product, dropped by 3.8%, percentage size of the economy. Today, you're running deficits nearly twice that amount. Okay, so you could see pullbacks in consumer consumption, consumer spending, and I kind of feel like it's throwing rocks at a tank in this environment. Yeah, it's not good for the economy, but is it going to create a recession? Not when they're spraying the economy down with this much cash. Not at least in our opinion, especially when you start throwing rate cuts on top of it. So, with the way we measure GDP in this country, if they keep spending that money, you'll continue to see quote unquote economic growth. Is it real economic growth? No.
No.
Right? We're eating
Steroids. It's not real.
No, and we're eating seed corn, right? Well, we're just eating what we should be planting, and we will pay. We will rue the day, right? We will collect a debt on this.
Yeah.
And inflation is the first part of that debt, right? It's like the interest expense.
Somebody's going to pay for this. That's what I always tell everybody. Hey, we're writing checks, but I don't know whose ass is going to have to cash that thing, because it's probably not going to be our generation, but my kids, your kids, everybody's kids.
Well, yeah, look at home ownership costs, right?
Yeah.
I mean, anybody trying to buy a house is shouldering some of that cost right now, So it's happening, and we're on a completely unsustainable economic trajectory, and it's getting, and everybody's like, we have been for a while, and I go, yeah, but it's getting crazier by the day.
Yeah.
Like
right.
it's becoming more and more unsustainable, and where that ends, I don't know. But here's what it doesn't mean, and this is the biggest caution, and this is the hardest thing about navigating this market. The way you protect yourself against inflation is by owning inflationary assets. Yet at the same time, you need a risk management strategy, and certainly not trying to talk our book, because the underlying underpinnings of the economy, that's not what's growing it. It's not health and strength that's doing this. So what that means is, if at any point the government becomes constrained, this whole charade can fall apart in a hurry, because there's no real there. There's no meat underneath backing it. But you've got to be in the game, because the worst thing you can do is put money under your mattress. Yeah. And like we've said, there's a lot of, you should see our portfolios, man. We're ripping. And the reason we're ripping is the exposure to lately, some cheap value stocks that got beat up for dumb reasons. But, uranium, gold, silver, we're hitting all-time highs, and this stuff is still dirt cheap, and it's a beautiful way to hedge yourself from inflation. So it's not a one pill prescription, but it's certainly part of the way to defend yourself. And I'm just afraid of the most responsible among us see all this craziness going on, and their reaction is to get more defensive in their portfolio. And unfortunately, in this environment, I think it's kind of you're doing the opposite of what you probably should be doing.
Absolutely. His name is Zach Abraham, Chief Investment Officer, Bulwark Capital. People want to reach out to you because they'd be foolish not to. They want to get as I like to call it, a second opinion when it comes to their risk management, and they want to get a risk review. What do they do?
Yeah, just give us a call, 866-779-RISK, or just go to the radio show website, knowyourriskradio.com or bulwarkcapitalmanagement.com. Google us, Know Your Risk Radio Podcast. We're not hard to find.
You're the man, brother. You go do your thing, and we'll talk to you next week.
All right, thanks for having me, man. Fun as always.
Investment advisory services offered through Trek Financial LLC, an SEC-registered investment advisor. The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. Any references to performance of securities are thought to be materially accurate, and actual performance may differ. Investments involve risk and are not guaranteed. Past performance doesn't guarantee future results. Trek 24308.